I'm Lisa J. Stocks, back with another stock market update. And today I'm going to be talking about how we need to be ready for the ups and downs on the stock market. No matter who is in the White House, we need to be ready because there are going to be dips, major dips that occur from time to time, and we have to be ready for it and continue to be strong in our investing strategies. So, this week on Wednesday, there was a notable event, one that hasn't happened in my lifetime since 1974. The Dow Jones recorded its first 10-day losing streak in 50 years. So, investors were asking, what is going on? And the stock market was down across the board, the S&P, the Nasdaq, the Dow, as well as the Russell 2000. And this is going to happen from time to time due to many factors. This week we had the Fed rate, which was cut by another 25 basis points, and they're expecting that there will only be 2 more cuts coming in 2025 as opposed to maybe 5, which was something that some people were expecting. But it is what it is, and we have to be ready to continue our investing strategy in the economy that we are living in. So I'm basically coming to you to show you this is what the market looked like on Wednesday. Completely red across the board. One sector in the green, which was health. It looks almost identical to a post that I shared on my community wall 4 months ago, where when it was red across the board with only semiconductor in the green. So I've been an investor for a while now. I've seen the ups and downs. Investing may not look like you expect it to all the time, especially if you're a newer investor and not very deep in profit. But we have to be ready for market volatility. It may feel scary, but we have to stay strong and stay calm. And market drops are normal. The stock market does not move in a straight line. There are going to be dips like this, and we're going to go through different cycles. This is one of my favorite images to show you what the reality is versus what a newer investor may expect if they haven't been investing long term and keeping an eye on the market. We have to be ready for the ups and downs that we're seeing here in this lower part of the image. It's not going to just be a smooth ride up. So we have to have our eyes open to the opportunities in the market. When the stock prices fall, it could be a great time to buy high quality stocks, ETFs, whatever you are investing into, and think of it as a sale for us long-term investors. If you're focused on the long term, 10, 20, 30 years, short-term drops like this shouldn't matter, but you have to evaluate your age and where you are at in the process of your investing journey. So also looking back to 4 months ago, I posted this to my members that Alphabet was $160.49. It's now $191.41. And it has an average price target of $211 and a high of $240. So basically what I was sharing with them is I was going to be taking advantage of that price of $160 or lower. I definitely have been concentrating on it while it's been under 180 because it is a long-term investment for me. Still looking back 4 months ago, I was doing the same thing with Bitcoin, and it was between 51 and 54,000 when I was deciding to put a little bit more focus into building up my position. And today, at the time of this recording, Bitcoin is $97,000. So you have to have your eyes open and see the big picture of your investing strategy, what path you want to be on, what positions you want to put focus into adding into your portfolio. Don't become emotional when it comes to your decision making. Put in the work before adding things to your portfolio so that you won't sell out of good positions out of fear. You won't be worried about the market volatility. Make sure that your investments are spread across different sectors and asset types. Understand the market cycles and the news catalysts and things that can happen that can shake up the market, but it will turn back around. And if you have a concern about individual stocks or crypto, like the examples that I've used so far, you can focus on those ETFs that give you exposure to hundreds, even thousands of stocks, a basket of stocks. So you'll be less impacted with the market volatility. But we are also impacted there. Taking a look at VTI, for example, we've been as high as $302 this year, but we're slightly down at the end of the week, 293.28. Over the last week, down 2.43%. And we see where the severe drop off happened midweek. But you have to be ready. And like I said, have your eyes open to the opportunity that is in front of you in order to take advantage of lower prices when it comes to the stock market. We should be as excited to have our stocks on sale every once in a while because our good, sound investments will recover. So, of course, I didn't sell anything this week. I've been buying my VTI, XRP, and some of my other individual stocks that I saw had a pullback that I'm still working on building up my positions into. But let me take a minute and talk to you a little bit about XRP and my strategy that I have going on over there, which is using my limit orders in order to catch that dip. I saw someone recently posted a comment about XRP's price dip down at 3 in the morning their time. How would they have been able to catch it? Your limit order is what could have helped this person, and it is what allows me to do some of my investing and catch the prices that I want, that I have been waiting for. For example, XRP is currently $2.23, but looking back over the week, it dipped down to 1.989. Looking back further in the month, 193, 208. So, in order for me to catch some of those prices, no matter what time of the day it is, whether I'm out busy, running around, driving the car, or asleep, I can have my limit order, like this one, for example, sitting and waiting to see if it hits the price that I have listed. On this particular order, I have $1.98 that I set, good to cancel. So that sits in there for a few months. And if XRP does dip down to this price, this will fill automatically for me. And here's another one that actually did fill. I had a limit price listed at 201. I created it on December the 9th and it filled on December 10th. And I have other orders sitting in there right now, I think going down into the $1 and 80s and even 70s, because I'm shooting my shot to see if XRP comes down to those price points, I potentially can pick it up at a lower price. So that's my way of being ready and taking advantage, whether it's crypto or my regular blue chip stocks or ETFs. I can go about this method in order to catch these price dips. And another thing that I do is set alerts. These are some alerts I have currently in for XRP. If it's below 2.1, 2.2, $1.99, moving down by 3%. These are things that I will get alerted to. But like I said, if I'm out living life and I accidentally miss it, I still have those limit orders in there that could fill. And as I said, you can do the same when it comes to your other types of investments. It's not specific to crypto, but when you have those limit orders sitting in there, your funds are then tied up into the potential order so that it could fill. For example, if you had $750 sitting in your cash management account over at Webull, earning you your 4.0 APY, but you had an order in to say, pick up one share of Meta if it hits $580, you would then only have $170 available to you for investing. So this has happened to me before where I've had to give up on my hopes of getting a particular limit order to fill due to my budget in order to free up that money and do some investment on that particular day. But there's been other times where I had an order sitting for many weeks and then suddenly it filled at a low price that I was waiting for. So, as I said, there's always things that are going to shake up the economy a bit, but we have to be ready for it and be ready to move forward. This week, at the end of the week, we had another news catalyst, which was the CPE data, and it came in better than expected. And according to this article, we're on the path to getting inflation to 2%. So the PCE is how the government goes about rating consumer spending for goods and services. So I am a long-term investor and I am in it to win it. And I'm here and ready to take advantage of the opportunity of investing, even during the red days, even during the hard times. I want to have my cash on hand and be ready to go hard on those investments that I'm still working on building out into my portfolio, because I see the benefit of long-term investing, buying and holding these good quality investments. And I have seen the growth. And like I said earlier, I know it's not as easy when you are not deep in profit, when you're not as established in building out your portfolio. You may see these red days and see many positions in your portfolio actually go red. But in time, after building out your long-term positions, it will become easier. It was just a week ago, I was saying that in all of my portfolios, Tesla is over 100% up. But looking at those investments, Tesla, for example, I'm currently 95.92% up. So still very significant because I've been putting in the work over the long term. So in my portfolio, I'm seeing this slight pullback of about 5% this week. Same thing when it comes to Amazon, down 2.3% on the week. But I've been investing for several years and I'm still up 70.95%. And for example, VTI, one of my ETFs that we took a look at earlier, I'm up 37.12%. So when you think about your investing, think about the long term. You may have to put in years of work in order to be deep in profit in all of your positions, but that's what long-term investing is about. And that's what I'm trying to build over here in my portfolio for retirement, as well as early retirement, and for my daughter as well. Keep the big picture in mind. So remember, investing is not an overnight thing. I'm an investor first and foremost, and it takes time. Unlike trading, don't mix up the two. Put in the work to build out your portfolio. Don't be scared by those red days. There will be more ahead of us, but I believe there will also be lots of growth and lots of potential to build wealth and make your money grow more than you ever could by holding on to it and not having it invested in the market. So guys, I'm just here sharing my journey, not a suggestion for you to buy, hold, or sell anything that I have in my portfolio. But I'm staying strong and focused on those blue chip stocks, ETFs, and some crypto because that's what works for me. Thanks for watching. Make sure to like, subscribe, hit that notification bell so that you can keep up with all of my videos and live streams. Check out my referral links for Webull and Moomoo. They will be in the description and pinned in the comments. And just an FYI, I've been doing most of my crypto investments on Webull Pay, and they have been adding more coins to their investment platform. And I'm just going to quickly just flip through what they currently have available. I'm not going to read every name, but I'm just going to share. So on this first page here, I definitely have Bitcoin, Ethereum, and XRP in my portfolio, and Shiba Inu. And here are some other coins that have been added, including HBAR, Pepe, and this is the last grouping with more names which you might find familiar, like Bonk and Phantom. So thanks for watching. Okay, bye.